ISAs are one of the most powerful tools in the UK economy. But did you know less than 42% of adults in the UK have one? Many people missing out on the best rates, the best income, and more importantly, tax-free returns in the stock market. But let's fix that. If you're new to the channel, please do leave a like and let me know, do you have an ISA? Now, I want to try and keep this video very, very easy so you don't get lost. You've got cash ISAs, you've got stocks and shares ISAs, you've also got innovative finance ISA, which has a bit of a variable to it in terms of how much you can invest in it, and a lifetime ISA. We're going to only focus on the top two because they're the most important. Lifetime ISAs are more for people who are looking to like build wealth for a house, so to speak, because you get a little bit of a bonus. The innovation one, I think that's going to get scrapped, to be honest, so let's not waste our time. Now, with this, just to be caveat, £20,000 per year maximum in all of these basically. So all four of them. So if you've got all four, you can only put £20,000 in as a combination, right? That's important to note because if you start getting lost on different platforms, you go, oh, how much did I invest? Ooh, get lost. But they are all tax free. Capital gains tax free. Dividend tax free. Any income tax as well, free. Great. Also, little caveat, if you've got little ones, they use a junior ISA, £4,000 per year can go into those too. Now, on the start of the video, I mentioned that less than half of the population, pretty much, as of this data, have them. And that's scary. 42% in England. Oh, God. Only 15% of people hold their stocks and shares ISA. 31% roughly is in a cash ISA, and more importantly, 17% of people in the UK have never heard of a stocks and shares ISA, which has been put on the Investment Association website. 1 in 5, 17% have never heard of a stocks and shares ISA. 25% have heard of it, but they don't know anything about it. That's because retail banks don't really market it, that's why. Oh, you old people that are probably not watching my channel, you'll know that mostly it is you guys. The people who have probably built wealth over time can then afford to invest, put their money in, which is probably the issue here. Now, when we talk about the obvious in the room here, I want to talk about the rules. Keep it super simple with this because I think this is where people get overawed and you are marketed in banks the wrong way. Anyone over the age of 18 can open either a cash ISA or stocks and shares ISA. As I say, these are junior ISA as well. Your parents will probably know. Now, with this, what has changed in 2024, which is huge, by the way, when we talk about the whole element around this, guess what? Some platforms, most platforms, especially non-banking ones, as in non-retail bank like Barclays, HSBC, they offer flexible ISAs, allowing you to withdraw, move them around within a platform without disturbing your allowance. So say, for example, I put £10,000 in. 3 months later, I break my leg, I'm buggered, I need to take it out. I can take it out and then I can put it back in towards the end of the year if I want to, and it doesn't disrupt it. It's great. And guess what? With stuff like this, it allows you to be flexible with multiple things. So for example, if random example, I make a couple of $1,000 or £1,000 or whatever I am investing in, I can move that from stocks and shares into cash ISA as well on the same platform. Doesn't change anything. And guess what? Any profit you make is on top of your allowance. So it's always 20,000. And now that I have mentioned stocks and shares ISAs, just a little bit of a footnote, you can invest in pretty much anything on whatever platform it is. Now you can talk about funds, you can talk about individual stocks. The only thing you can't really invest in is cryptocurrency, but ultimately, yeah, you can do whatever you want. I will go on more detail about this in a second. But going back a step, most ISA, especially in banks, will offer flexible cash, fixed terms ISA, or just simple easy access where you'll get the worst returns, which I will showcase. Now I want to showcase the obvious in the room here. I want to showcase 3 platforms plus a retail bank just to kind of give you an idea because I think this is very, very important. Now, this is Moneybox. I have used it before in the past. Now, again, you can talk about certain things, £20,000 into your stocks and shares ISA. Now, as cash holding it, you can get a 3.25% interest rate, which is awesome. However, thus being said, what you can do with this, you can have a questionnaire and it will basically give you an allocation and it will tell you what the hell to do based off you, if you want to. Now, most platforms do this as well if you're new to investing. I think Invest Engine does it as well. You can have cautious, you can have balanced or adventurous, for example, and you can put them into funds. And those funds are a big, massive overwrapper of many different stocks and shares or indices, whatever, allowing you to kind of have full control of it, but they will do most of it for you, which is important because they'll give you returns, they'll have a track record, and it's much, much easier. You can also customize your allocations on a lot of these as well to make it much easier, because you may have more cash in some, you may have more stocks. It depends on your risk appetite. And as I say, there's a bit of a fee here, but nothing crazy. So if we go on global shares, for example, here, this is going to go through it all. This is probably a video. It's tracking 1,600 companies across 23 developed countries. So guess what? You've probably got the best return there of safety. And if you want to buy stocks, you can. Now, more for cash ISA sort of stuff. Again, Plum does the same sort of thing. It does have funds as well, but currently right now, 4.85% in the cash ISA, which is absolutely mental. I think there's a bonus on that, but at the end of the day, this is going to be much more than your retail bank. And also, as always, Plum does a stocks and shares ISA too. 26 mutual funds, as well as 3,000 stocks on the platform. Now, the main one that I do use is actually trading 212, stocks and shares ISA. Now, guess what? You can have funds, you can have individual stocks. This has the most amount of stocks by far, loads. And even if I put this into cash, as in, say, for example, as I said before, if I'd taken some profit, I can put it into cash or leave it in cash, and I will get 4.3% interest, which is crazy. If you want to diversify into the cash side of it, which is flexible, you can withdraw at any time and you can move between each one. It's 4.1% and it is paid every single day. Now, just to compare Barclays, sorry Barclays, but I am a holder of Barclays, but I don't use their ISA products, no way, because this is why their stock price is going up, because they're making loads of profit. Yeah, the baseline is very different to what they're offering. Guess what? Gobble, gobble, gobble. Now, £54 billion is sitting in low interest accounts in ISAs like this, losing 20 billion, sorry, get my words right, in interest every single year. Madness. Now, to go back a step on all of this and go, why is it better to hold maybe stocks and shares ISA for the long term? Well, guess what? If you're going to put, say, £200 per month, and let's just say on average you get roughly 6%, sometimes funds are a lot higher than that, by the way, that's very conservative. You can have £91,000 tax-free within 20 years. That's mad. Whereas with a cash ISA, guess what? If you do the same, you're never going to get anywhere near a 6% return. I know there's risks involved here, but you've got to think of the longer term game here. For me, I think the appetite for investing in the UK is very different versus, say, the US, in my opinion. But yes, there is risks involved. You can be exposed to market risk, but if you are following the right funds, for example, on the stocks and shares ISA, or if you've got enough knowledge in the stocks that you're buying, you can get dividends and they can compound and you can get returns that are tax-free. With a cash ISA, though, you are going to get returns. They may be paid monthly or even yearly in some platforms, and that isn't going to compound fast enough, in my opinion. But as I say, there is fees involved, but there is now flexibility. You can do withdrawals and put it back in if you so need to. There's a lot of new rules here. I do believe that they are underutilized. The data proves that with so much money sitting in low interest accounts, there's only 42% of people, as it stands in terms of data, have an actual ISA. And mainly people over the age of 55 are actually utilizing to their full capacity. I think only 8% of people who have an ISA fill it to £20,000 per year. That is mad. So if you're not using the allowance, you are leaving money on the table, please do consider your investments, because it's important. You've got to think of the bigger picture, the long term. You want to try and beat inflation. And subscribe to the channel if you want to see my portfolio reviews, updates, and what I'm doing with my stocks. And this is just the start of the journey.